What's up, Facebook? Ty Crandall here with Credit Suite, and today we're talking about credit scores. We're talking about all different kind of credit scores. We're going to be talking about your consumer credit scores, your FICO credit scores, your Vantage credit scores. We're also going to be talking about your business credit scores. We're going to be talking about the main three business credit scores offered by Equifax, Experian, and Dun & Bradstreet. We're also going to be talking about other scores offered by Dun & Bradstreet, Equifax, and Experian as well. Princess, welcome. Thanks for coming in. I love it. I love Princess being on the front of your name. I think it's cool. And then we're also going to be talking about bank credit scores. Now, bank credit scores are kind of like the hidden credit scores that most business owners don't know they have. This is the stuff you won't find online. Your bank will never tell you what your bank credit score is, but it will determine if you ever get a loan from your bank, period. You cannot get a loan from your bank unless you have at least a low 5 bank credit score. We're going to talk about what a low 5 bank credit score means. We're going to talk about how to get a low 5 bank credit score or even a high 5 bank credit score. Thank you, Vero. Mr. Dave Freeze is there giving me all kinds of likes and loves. I love it. So that's what we're going to be diving into. Michael, thanks for coming in. So today is going to be a busy stream because, again, consumer, business, and bank credit scores, there's a lot of different kind of credit scores that we're going to be covering today. A lot of great information. And we're going to stay away from the chalkboard today. Today we're going to be diving into the whiteboard. So let's go. So as we're looking here, that is your first name. That's awesome. I love that Princess is your first name. That is awesome. My wife would love that if that were her first name. Okay, got my handy pointer here. So today, Credit Decoded. How your consumer, business, bank credit scores really work. We're going to dive into all of them. Calvin, welcome. Thanks for coming in. What's up, Michael? Thanks for coming in from one veteran to another, man. Thank you for your service. I appreciate that. Thank you very much. And happy Pearl Harbor Day to you as well. So consumer credit. When we talk about consumer credit, we're predicting the risk of going 90 days late on any account in the next 2 years. And Dave Freeze is going crazy with the likes and love, which is pretty awesome for my mentor to see that. Okay, so predicts the risk of going 90 days late. This is what the credit reporting agencies refer to as seriously delinquent over the next 2 years. Now, your FICO score really is made up of 5 different components here. Payment history accounts for 35% of your score. Utilization, 30% of your score. The length of credit you have. The new credit counts for 10 and credit mix counts for 10. Let's take a deeper dive here. So payment history obviously accounts for the majority of your FICO score, the biggest aspect here at 35%. Utilization is 30%. This is how you're utilizing installment loans and revolving credit cards as well. So this is important to note. The balances you carry in relation to the limits on your credit accounts are almost equally as important to your overall FICO score makeup as what your payment history is. Dante, thanks for coming in. So it's a pretty big deal, guys. Length of credit, how long you've had credit for, accounts for 15% of your score. There's 2 aspects to this. One, how long was the average length of time that you've had all credit accounts for, and what's the oldest credit account that you have on your credit report? The next is new credit, inquiries. This has to do with 2 different aspects. 1, how many inquiries do you have? And 2, how many of those inquiries resulted in actual accounts showing up on your credit report? The bottom line is, this aspect of your score, this 10%, can be damaged more if you have a bunch of inquiries. It can also be damaged if you have inquiries that don't result in actual approved accounts on your credit report. And credit mix accounts for 10% of your total score as well, just so you know. So James, thank you. Quick question, if a bank trusts us enough to approve us for the 10,000 credit card, then why do they penalize us for using more than 3K? That's crazy. I can't answer that question on why FICO does this. I can't. But what I can tell you is this. Think of it like this. Who has the best chance of paying their bills? Somebody that has $100,000 in their bank account or somebody that has $2,000? Obviously the guy with 100. But FICO can't see your bank account. So all FICO has to go off of how much money you may have available is available credit. So what they basically are saying is, hey, look, anytime you use and reduce that available credit, then what happens is that damages your score, because the more credit that you use, the less money you have available in case for of emergencies or things come up. I can't speak for FICO on why utilization accounts for 30% of the score, but that makes sense. Since they can't see your bank account, see how much cash you have, the bottom line is the more money you have available, the better chance you have of paying your bills. So the way that they're looking at it is they're saying, hey, look, the more money you have available, the lower risk you are. The least amount of money you have available, the higher risk you are. And again, Dave, I appreciate the likes and loves. It's pretty awesome. Okay, so great program. Thank you, Dave. I appreciate it. Okay, so we've already went through and talked about what these are based on. Now, the consumer credit reporting agencies, as you probably know, there's 3 of them. There's TransUnion, there's Equifax, and Experian. Personal credit scores range from about 300 to 850, and Vantage scores also are the same at 300 to 850. Now, Vantage scores, especially here, can on the older model go from 501 to 990. So what is Vantage score? Well, here's how this works. When it comes down to it, FICO rules the credit scoring world in the consumer land, okay? Well, the bureaus kind of got sick of this. They said, we want our piece of the pie. So they created this score called Vantage score, but they really screwed it up, and here's what they did. They rolled out a range of 501 to 990 for the score. Well, this threw everybody off that's ever dealt with lending and issuing credit, because we're used to 500 being, for example, a bad score. We're used to 700 being a good score. Well, Vantage, 700 is a bad score. So because of this, it threw so many credit issuers and lenders off, nobody was using Vantage. So Vantage 3.0 now uses a similar model to FICO, where you're going to see this 300 to 850. So that really sums it up with consumer credit. What you need to do with consumer credit is several things. First, pay your bills as agreed. That's the greatest aspect of your score. Travis, thanks for coming in. I appreciate it. Good morning to you. Dave and everybody else, thanks for going crazy on the likes and loves. Thanks for sharing, guys. I appreciate it as well. Utilization, 30% of your score. If you ever want to rebuild credit quickly, add accounts, new positive accounts on your credit report, pay them as agreed, and make sure that you keep the balances as low on those as possible. Those are the best things you could do. Link the credit history. Only way you can improve this is authorized users. Go to a family member with a long-standing account and get added as an authorized user. Watch the amount of new credit you're applying for and make sure what you're applying for counts as, or you get approved for those accounts, because that can adversely affect your credit if not. And credit mix, try to have at least 1 to 2 mortgages, 1 to 2 auto loans, 1 to 2 other kind of loans, and also make sure you have about 3 major credit cards and some store credit cards. That's how you improve your consumer credit. So let's talk about business credit. Now, business credit's a little different. Business credit scores are a mathematical model to depict a business's risk of going seriously delinquent, 90 days late, same as consumer credit, but over a 12-month time period versus 2 years versus 24 months. So what it means here is that business credit's a little bit more forgiving. You can make mistakes when you build business credit and recover your scores faster because they're just depicting your risk of going late over the next 12 months instead of over the next 2 years. So it's easier to recover. Now there's 3 reporting agencies. 2 look familiar to us, Experian and Equifax. Same as what we saw up here on the consumer side, but TransUnion isn't here in the business world. Dun & Bradstreet is. In the business world, Dun & Bradstreet is by far the biggest reporting agency that exists. As a matter of fact, they have about 220 million files on record. Experian has 27 million. They literally have 10x the amount of credit or records on file than Experian. They are huge. They've been around 40 years before the first consumer reporting agency. Dave says, just shared this. Thank you so much for sharing that. So many business owners need to understand this. Again, thanks. Thank you. Guys, thanks for the likes. Thanks for the loves. Thank you for sharing it. It lets me know that I'm on the right track. I appreciate it. So one thing you need to know about business credit scores, they're not automatic. Just because you have an EIN does not mean you have good business credit scores. To get approved with Dun & Bradstreet, you must have a DUNS number to get a PAYDEX score with them. And we're going to talk about your PAYDEX score in just a minute and how your PAYDEX score of the business credit building works. But I will tell you, before you'll ever get a PAYDEX score, you've got to get this DUNS number, which is free. You can Google free DUNS number from Dun & Bradstreet to get that PAYDEX score. First, you want to check and see if you already have credit established. And I'll show you an actual commercial credit report, show you why. You can do a free search here at creditsuite.com/reports to find out. And James is saying, how do you get business credit? That's a whole different live stream here. But we will talk a little bit about that probably as we wrap up. But again, teaching you the steps to build business credit, it's a little bit more complicated. I can tell you it's as simple as setting up your credibility, making sure you get your DUNS number, and getting some initial accounts with creditors that report, credit issuers that report to the actual reporting agencies such as Uline and Quill. That's a quick summary, but we do have a lot of stuff on our Facebook page. If you go to facebook.com/Credit Suite, our past streams where we map out exactly the step to building business credit. So here's what I wanted to show you. It's very important that you see this. In the commercial credit world, you can be given a failing credit score, 28. This is a 28 out of 100 scored. You can see here how high risk that is. It's very high risk, low risk, high risk. And you can see why. Lack of active trades. We also see on this credit report there are no trade lines. None. This is the end. There are no accounts. It's all zeros. So this person has no credit, but still has a failing credit score. Guys, this is like in the commercial credit world. You will be given a failing credit score if they know you exist, know your SIC, and you have no credit established. So we need to figure this out. So you're going to build your business credit and you want to get good scores, do a free search at this link, creditsuite.com/reports, to see if these guys know you exist. If they do, it's worth pulling credit monitoring with Equifax and Experian to figure it out. Now, Dun & Bradstreet is different. As I just mentioned, with Dun & Bradstreet, you've got to have some accounts reporting before you can actually establish a score. You need three accounts reporting with D&B before they'll give you a score, and you must have your DUNS number. I get this question all the time. Why aren't my creditors reporting to Dun & Bradstreet? Well, they are. The problem is if you didn't get your DUNS, and if you don't have three, D&B won't populate a report and won't give you a PAYDEX score. So you want to check to see if you have any credit established with them by that free check I just showed. You want to get that DUNS number, and you want to make sure that you know that you're building business credit here in your business's name, not you as the actual business owner. Now, speaking of D&B's PAYDEX score, here's what you need to know. It ranges from 0 to 100, and 80 plus is considered a good score. Here, I'll show you. Here's how PAYDEX actually looks. Now, it's very different than FICO. FICO is all based on a percentage of value of your score for different things. With Dun & Bradstreet, your score is exactly based on how you pay. So if you pay your bills as agreed or promptly, you have an 80 score. If you pay your bills early, you get 100. If you pay it within the discount, you get a 90. Kevin, thanks for coming in, man. I hope you made it through the snow in Iowa yesterday. I enjoyed chatting with you on Facebook. So you can see here that your score is exactly based on how you pay. It's that simple. So when you come in and pay your bills early, then what happens is you get a good score. If you pay it late, how bad your score is how late you actually pay. Here's how D&B score works. Now, there's also something called a weighted average. And on a weighted average, it basically gives you more weight to accounts with higher limits and less weight to trade accounts that have lower limits. Bottom line is, if you're going to go late on an account with a lower limit versus an account with a higher limit because it'll have less of an impact to your score. Now, again, you can get a good score by paying promptly suppliers and vendors that report. You'll need about 5 trade lines reporting with D&B to start getting actual revolving credit, but only 3 trade lines to get a credit score, and it can take up to 90 days to report. Here's why. Because when we look at credit issuers like vendors that report to D&B, you have companies like Uline that report monthly. You have Quill that reports quarterly. We're not used to this. In the consumer world, people like Wells Fargo report every month. But in the business world, they can choose if they want to report monthly or quarterly. So Uline reports monthly, Quill reports quarterly. This is why sometimes it takes these guys 90 days to report. So if you're building business credit, there's some things you need to know here. One, D&B won't give you a PAYDEX score unless you have that DUNS number, nor will they unless you have 3 accounts reporting. And you have to give time for those accounts to report because sometimes it can take up to 90 days for those accounts to report. Now, there is a SIR rating, a supplier evaluation risk rating, which is for suppliers. There's also a bankruptcy predictor score that predicts the likelihood that you will file for bankruptcy and cease operations in the next year. It's 1 to 9. All 3 reporting agencies have this. They have a score that depicts if you're going to file for bankruptcy or not. It's a different score other than PAYDEX. There's also something called a supplier stability indicator, if you are a supplier, that predicts the likelihood the supplier will encounter large, significant financial operational stress within 90 days. Basically, that the supplier may go out of business. This is for companies that don't want to pay a supplier money just to find out the supplier goes out of business. Obviously problematic. So, a lot we've covered here. There's a supplier evaluation risk rating. There's a bankruptcy likelihood rating. There's a supplier stability rating. But what you mainly need to know is right here. You mainly need to know the paydex. You mainly need to know that with Dun & Bradstreet, as long as you pay your bills as agreed, you're going to get a good score. And Kevin says, bless the paydex. Yes, guys, this is the brilliance of business credit. You can build business credit super fast. These kind of limits, $5, $10, $15, $20,000 limits, these type of limits happen very, very quickly in the business credit world. You can get these kind of limits within 60 days to 6 months, depending on how fast you're applying. And you get them because to get a good score, all you're doing is paying a bill as agreed. Here, I'll show you. Remember we just looked at this credit report with a failing credit score because somebody has no credit? Check this out. Let's look at the opposite. This person got a 96 score, an excellent score. You can see here they're very low risk. And you can see how they did it. One and only one account reporting. One account, only one account, which this is Uline. One Uline account took this person from a failing score of 28 all the way up to an excellent score of 93 or 96. How's that possible? How do you go from a completely horrible score to quickly to a great score just because you paid one account as agreed? Simple. The scores are based on how you pay. You pay your bills as agreed, you get a good score. Michael says, another question. Of the vendor accounts that you recommend, which one reports to at least 2 of the business credit reporting agency? I'd like to get mine as effectively as possible. If you want the best ones that report to multiple, then you really need to consider these 3, Uline, Quill, and Granger. Those are the best 3 to actually consider. So now that we talked about D&B, let's talk about Experian. Experian, public records, trade information, financial history, judgments, UCC filings, they have all this into their score. Their score's a little different. Their score is based kind of like FICO on some other things here. 50 to 60% is based on payments and balances. 10 to 15% is utilization. 10 to 15% is derogatory items. 5 to 10% is historical behavior. 5 to 10 is age, industry, and size. But here's what's interesting to know. Payments and balances, how you pay your bill. Derogatory items, how you pay your bill. Historical behavior, how you pay your bill. So if you look at the math, up to 85% of Experian's Intellis score is also based on payment history. So 100% of D&B scores based on payment history. About 85% of Experian's based on payment history. So we're seeing a trend here. As long as you pay business credit accounts as agreed, you get good scores. Now, again, Experian has some other scores. They have that financial stability risk score, same as D&B. It predicts whether or not you're going to go bankrupt in the next 12 months. They have a blended score where they blend your commercial credit score and your consumer credit score. Here's great news. It's rarely used, and you'll know when it's used because somebody has to get your permission for you to pull the credit report and your social. If they don't get your permission to pull credit and your social, you'll never see a blended score pulled because they have to have your permission per the Fair Credit Reporting Act to pull your consumer credit score. So again, Experian primarily based on credit history. There are some other scores to keep in mind there. Okay, so again, you know, we've already looked at these percentages and what these are based on. They look at all this kind of data, and here's the problem. They look at data called firmographics. And basically, they'll populate score based just on the firmographics. That's what we just looked at. The reason you can be issued a failing business credit score even when you have no credit is because once they know your SIC, then they know your business name, address, and SIC. They'll populate a report based on what they call firmographics, which includes this in SIC. And you can see here, they don't like the industry. They don't like the business type. They also don't like that there's a lack of trades, which is why the scores on this commercial credit report are so low. Again, easy to turn around. Just one account takes you from a failing score here of 28 to a low risk score of 93. You can see right here, low risk, all because of one account So whether it's Experian, DMB, and Equifax, a good accounts paying as agreed really is the key. And Kevin says, Ty always drops knowledge bombs. He's the real deal. I appreciate that. These boards look amazing. They do, although I don't like this color. What is this, yellow? I'm colorblind. It's yellow or it's green. Somebody help me and tell me what it is. I don't like it. It doesn't look as good on video, but I appreciate that. So, Experian. We went over a lot of stuff, what this is based on. Okay, so now let's talk about Equifax. Nobody wants to help me telling me what color this is. It's not nice. Yellow, green. It's both. There you go. Even being colorblind, I guess that's why it doesn't make sense. So Equifax, they have something called a credit risk score. Same thing, likelihood of defaulting in the next year. They also have that business failure score, which is the bankruptcy score as well. Okay, they also have a payment index, okay, which is a weighted index of businesses' current payment performance based on all payment experiences. DMB has a payment index as well. Let's look at this. Here's how Equifax's credit score works. Just like DMB, it's just based on how you pay your bills. If you have a 90 plus score, you pay as agreed. Yellow, green is teal. That's the problem, Michael. Being colorblind, I have no idea what teal is, these in-between colors. 80 to 89, 1 to 30 days late, 60 to 79, 31 to 68. Bottom line, pay your bills as agreed with Equifax. Pay your bills as agreed with DMB, you get a good score. Pay your bills as agreed with Experian, you get a good score because about 85% of the score is based on that. Now again, business failure risk score depicts going bankrupt. We've got the delinquency score, which predicts your risk of going delinquent, and a payment index as well. Now DMB has a payment index which has to do with whether or not they have your financials. So if you have good financials with Dun & Bradstreet, then if you have good financials, good tax returns, send them to Dun & Bradstreet. Go to Dun & Bradstreet's iUpdate service. You can upload your financials. Why? Because if DMB has your financial data, then they will actually populate a better payment index for you than if they don't. Here, let me see if I can pull this up and show you what this looks like on a real credit report. Okay, I'll show you. This is what it looks like. So here's a credit report we just looked at here. This person has a 96 score, but you can see here there's no data in this section. It's blank. Look at this comparison. Here we see there is data. We see they do know what the sales of the business are. They know the employees. So this is a difference. And this person isn't getting dinged because, again, we don't even know what their SIC code is. But here, we do know what their SIC code is, and we also know what their sales are and their employees are as well. Okay, so because of that, they can actually populate a different kind of payment index score for you based on whether or not they have these sales data. A lot of people are surprised to know that your revenue shows on these credit reports. Okay, so that's how that works. So again, that's what you need to know about Equifax. So we've looked at consumer FICO. Let me go here. This is an easier summary. We've looked at consumer FICO score. We know how it works. We've talked about how to improve the score. We've looked at your Paydex score with Dun & Bradstreet, your Equifax and Experian. We've determined that almost all these scores are basically based on how you pay your bills. Now, Kevin says in life, pay your bills is getting good credit. It's true. James says, can you show the best business to get credit from again? For business credit, all my company vehicles are my personal name. You can get auto vehicle financing. That's why I have a little guy going beep, beep here. You need about 10 accounts to get it in your business name without a guarantee. You can start building business credit with these kind of vendors. Uline, Quill, and Granger have no credit check. Wells Fargo does and requires pretty good credit. These guys will give you credit even if you have none. But there's a reason I call it step 3. You need to go through step 1 and 2. We don't have time today talking about all these credit scores to go through the steps to build business credit. But guys, if you go and grab the free guide at creditsuite.com/Facebook, it does map out how to build business credit. creditsuite.com/Facebook. If you go to facebook.com/creditsuite, then there you'll see our past videos, and we've done videos where we map out these steps in depth to build your business credit, just so you know. And Kevin says, James, give Credit Suite a call. Yeah, you can also give us a call. If you're looking for the fastest way to build business credit, if you want to get the auto vehicle financing without the guarantee and credit check quicker, well, then feel free to give us a call. 877-600-2487. We'll talk to you about the best way to build your business credit. So we've talked about commercial. We've talked about consumer. Let me talk to you about one other one. It's called FICO SBSS. Okay, Small Business Scoring Service is what SBSS stands for. SBA uses this for all business loans. You can't get a business loan if you don't have a FICO SBSS score. The score reflects your likelihood of paying your bills on time, and it actually ranges up to 300. Now, here's how FICO SBSS works. It takes into account all of the above, except for number 2. It looks at your consumer credit scores and your business credit scores. The way FICO SBSS works, it looks at your business credit scores first, then it looks at your consumer. You have to have good business credit scores to be able to get a FICO SBSS score of 140, which is necessary for an SBA loan. Bottom line, you cannot get a conventional bank loan or an SBA loan without building your business credit. Other thing you need to know, the more established your business credit is, the less FICO looks at your consumer credit score when they populate the FICO business credit score. Bottom line, build your business credit by getting accounts, paying them as agreed, get good scores here. That will dominate your FICO SBSS score. Then your consumer credit won't be as big of a deal, and that's a big, big, big tip that will help you get loans from your actual bank to get SBA loans. So speaking of bank loans, let's talk about something that you maybe have never heard of before. It's called bank credit scores, or your bank rating. This is the total amount of borrowing capacity a business can get from the banking system. And I have a question here. Jason says, I've tried filling out Walmart and Staples online app for business credit, but it doesn't let you complete unless you entered your name and social. How do you get around it? Well, it's simple. 2 things you need to know. First of all, you shouldn't even be applying for Staples or Walmart unless you have at least 5 to 7 confirmed accounts reporting on your business credit reports. You won't get approved anyways. You've got to have at least 5 to 7 accounts before you even apply for those guys. Second thing to know, you call them. You can either fax an application with no social or call them to apply without giving them a social, and both of these, Staples and Walmart, will let you. Staples gives you an application you could print and fax. You can also call them. If you do either one of those, that's how you get around it with no social. It's as simple as that. So back to bank credit scores. So what we're looking at here is this is basically how much money you can borrow for your business at a bank. And here's primarily how your bank credit score works. This is stuff you will not see online, guys. Your banks will not publish your scores. You'll never know what your bank rating is. No problem, Jason. You're also not going to see a bunch of information online about this. But here's how it works. Your bank rating, your secret bank credit score, is based on the average amount of money you keep in your bank account over a 90-day time period. If you keep what's lendable is a low 5 right here. If you are any lower than a low 5 into a 4, you will not ever get a bank loan in a 4. You have to, if you want a bank loan for your business, an SBA loan, you have to be a high, middle, or low 5. How do you get it? You keep this much money on your, I'm so low on my whiteboard, I'm sitting here on my knees. Okay, so $10,000 to $39,000 on average in your bank account over a 90-day period will give you a low 5 rating, which makes you lendable. If you want to get to the highest bank rating you can get, you need to keep at least $70,000 in your bank account over the last 90 days. Why am I telling you this? It's very important. If you ever want to get a loan from your bank, make sure 90 days before you apply that you have $10,000 or more in there, and keep it in there so you have a rating high enough to actually be able to get a bank loan. And Kevin says, keep in mind your business scores need to be good with those 5 to trades reporting or they will stall you. Yes. Remember, getting business credit, as we just talked about with Jason, is about getting enough trade lines and paying the bills as agreed. Now, there's other factors that affect your bank rating as well. The number of non-sufficient funds you have in your bank account. Having positive cash flow. Having your bank account end with more money than what you actually put in. You're putting more money in every month than you're taking out. You need to have consistent deposits. You need the length of time you've had your bank account ties into it. Other bank products you use, investment accounts, other bank accounts. All these type of things will affect inevitably your bank rating. But what primarily drives it is how much you have in the bank account. Michael says, bank rating, if we get the Wells Fargo secured card for $5,000, is that considered $5,000 towards a bank rating? No. This is about money that's in your bank account. The Wells Fargo account's a secured credit card. It's not your bank account. So it would not count. So for your bank rating, you need to have 10,000 or more to have a low 5 rating, which makes you lendable over a 90-day time period. So again, what I'm saying is all that matters is the last 90 days. If you're going to get a bank loan 90 days before you go to apply, you need to be wise enough to know that you need to keep at least 10 grand or more in your bank account and you'll be good. Woo, a lot we covered. Literally, we covered so much today that it covers more than half of this whiteboard. It covers all of this and all of this. It's about 70% of this huge whiteboard. So let's recap. Consumer FICO, based on 5 things. Pay your bills as agreed. Keep your balances low in relation to your limit. Make sure you don't apply for a bunch of new credit and try to only apply when you know you're going to get approved because both factor into your length of new credit. Okay, if you don't have a long-standing credit account on your credit report, consider getting added as an authorized user to a family member's account and have a good credit mix. FICO considers that to be 1 to 2 loans, 1 to 2 auto loans, 1 to 2 mortgages, 3 major credit cards, and you can have some other store credit cards as well. And Michael says, I understand that, but the $5,000 is in a Wells Fargo savings account, not with the credit card, no. With Wells Fargo Secure Credit Card, you're putting the $5 grand into a credit card, not in a bank account. That's exactly why I'm saying that it won't work. Because a secured credit card, just because a secured credit card is issued by Wells Fargo doesn't mean your $5 grand's in the bank account. It's not. It's into the credit card, not the bank account, which is why I said that. And Kevin says, if you dip below 10,000 for, say, 3 days, does it drop it? Let's keep in mind, your bank rating is an average of what you keep over 90 days. So if you drop below 10 grand, then make sure that you stay above 10 grand the rest of the time to make sure the average works out because it's an average. So that's how you have the best consumer score, bank credit. What you need to know is it's based on the 90-day balance. Don't overdraw your account. Put more money in than you take out. Try to put as many consistent deposits in there as possible. Open the bank account as soon as you can, as soon as you get that bank account, as soon as your business is established. Open other bank products. Open a money market account. Open a second account. Those type of things calculate into the bank rating. And most importantly, 90 days before you even think of applying for a loan, put 10 grand in there. The average of 90 days is what gets you a lendable bank rating. The more money you put in there, the higher the bank rating will be. Thank you, Kevin. I appreciate it. Thank you, James. Appreciate it. 3, business credit scores. A lot going on here. Each one of these reporting agencies has about 5 credit scores you may see on the credit report. Some of it has to do with financials. Some of it has to do with your likelihood to go bankrupt. Some of it has to do with suppliers. But the main thing you need to know is pay your bills as agreed. You get good business credit scores. D&B, strictly based on how you pay. You pay your bills as agreed, you get a good score. How good? Depends on how early you pay. You pay your bills late, you get a bad score. How bad? Depends on how late you pay. Same with Equifax. How early you pay determines how good your score is. How late you pay determines how bad it is. And Telescore, Experian, there are factors that tie in here. Your age, your industry, your size, your utilization, your balances. But what mainly matters here is payment history, payments, derogatory items as payments, historical behaviors payments, up to 85% of the score's payments. So with all 3, tips on improving all aspects of FICO we talked about. We talked about the tips to improve bank rating, and we've also talked about the tips to improve business credit scores, which are getting accounts and paying them as So a lot we covered here because we covered 3 completely different topics in one, but hopefully this helps you all. Now you know how your consumer credit scores work. Now you know how to get the best scores with all 3 of them. Guys, look, I love credit scores because I'm a math guy. And I like it because when you understand how they work, you can manipulate them, and I mean manipulate in a good way, to your benefit. Once you know the math of how FICO works, it's easier to control them. So let me give you another example. Now that you know that D&B has something called a weighted average that weights your higher limit accounts first, you know to pay your bills as agreed. You know if you ever go late to go late on the lower limit account. Those tips will help you maintain good scores. Now that you know utilization is 30% of your FICO, you know to keep your balances as low as possible, and you know to establish business credit So you're not using your consumer credit scores to manage your actual business. If you do that and you get credit cards that you want to use for your business that show on your consumer credit report, you'll tank your scores because you're affecting your utilization and new credit. So just by building business credit, you can help your consumer credit scores because it helps keep the balances you have on business accounts off of your consumer FICO, which as you can see is a pretty big deal here. Bank credit, you know to keep 10 grand on average in your bank account over the last 90 days because that's how this score works. So now that you know how the score works, now you're into a point where now you can make sure that you can manipulate in a good legal way your scores to your benefit to have the best scores. So hopefully you got a lot of good information here. Look, a lot of you have questions on loans. A lot of you have questions on building business credit. There's some options. First of all, if you want the fastest, easiest way to build business credit, let us know. 877-600-2487. You can even schedule a free consultation at creditsuite.com/consult. You can do that as well. If you want a free guide on building business credit, go to creditsuite.com/Facebook. We'll get you a great guide, and you'll also get more information from me on getting loans and getting credit cards. Also, just go to creditsuite.com. At the top right of our page, you'll find our Periscope, you'll find our YouTube, you'll find our Facebook where we go live and we talk about a bunch of different stuff that as long as you go. Michael says, a quick biz setup question. I live in Virginia, but I'm going to incorporate Florida. I want to send Biz.org, the app wants a registered agent to live in Florida. Can you guys help with that or refer me to someone? That's probably out of even our scope because asking for somebody to be a registered agent for your business, that would be something you'd have to know somebody. It wouldn't be somebody that we could recommend, but I can tell you what you're trying to do is problematic because it doesn't make any sense. People don't have a corporation in one state and operate in another. And the fact that you're doing that, the way that credibility works for a business, it's going to eventually become an issue for you. Your address is going to be here. All your website's going to have to reflect that you're in the state you're incorporated. If you incorporate in Florida and you operate the business out of Virginia, it's going to throw up all kind of red flags to credit issuers and lenders that will absolutely get you denied. You should always incorporate in the state you're going to operate the business in. If not, you got a long road ahead. You're going to have to set up the bank account in Florida. You're going to need to set up the website contact us page in Florida. Everything that has to do with your business will have to reflect Florida or you're going to run into all kinds of problems. That's why I never recommend doing what you're talking about doing, just so you know. Okay, and Jesse says, I got my D&B number. How do we go about starting to get business credit for your business? We're a sole prop. Guys, that is a 45-minute discussion. Way too much to dive into today. So there's a couple things I'll recommend. Go to creditsuite.com. Top right of our page, find our YouTube channel. We have hundreds of videos that will help you. We just did a live video stream on Facebook or on YouTube Tuesday that teaches you the steps to build business credit. And if you also go to Facebook, facebook.com/Credit Suite, you'll see my other live streams where I go through that 45-minute discussion of the exact steps to build business credit and map that out for you. Also, grab this free guide, creditsuite.com/Facebook. That guide maps out how to build business credit as well. And my that Florida is a no state tax. I get it. Trust me, I live in Florida because there's no taxes down here. It's brilliant because we have tourists that pay all of our taxes for us. Thank you, tourists. Thank you, Mickey Mouse, for taking all these tourist money so we don't have to pay state taxes. But you have to understand, Michael, when you're trying to build a credible business and legitimacy really goes a long way to getting loans, credit cards, and credit lines, having a business in one state, licensed in one state and operating out of another has all kinds of red flag issues that really speak to legitimacy and credibility. They're going to create serious lifelong problems for you. So don't screw this up from the beginning. You really should get incorporated. If you like not having state taxes, come on down. Move down here. The weather's beautiful as well. You'll enjoy it. But try not to do a corporation set up in one state and operate out of another. There's all kinds of problems. If they see your home address and all these type of things are in one state and you work in another, it just doesn't make any sense. It's going to create all kinds of issues. Thank you. Love the info, Jesse. Thank you. Okay, so I'm going to wrap this up. We talked about a lot of credit scoring. A lot of you want information on business credit. I promise you I will address that in the weeks to come. In the weeks to come, we will talk about business credit. I will be talking about building those. I'm looking right now at our schedule so I can try to give you an idea of when we may actually be doing that on Facebook again. So we will be doing that probably in a couple weeks. We'll be talking about the different ways you could build business credit. We'll be talking about vendors you could access. And we just did a stream, I think last week, that showed you how to get $20,000 business credit accounts for your company based on your EIN, not your social. We actually just did that 11:30. So if you go to facebook.com/credit suite, you'll see our past videos. The last video on 11:30, we just mapped out those steps to build business credit. That was last week. So if you go to that video, for all of you that have questions, that will map out what you're looking for. Michael, last question. I downloaded your Facebook guide last night. Great info. The virtual address company you recommend, Regis. Any reason why you don't recommend Opus? They're about $50 a month cheaper. Don't know much about Opus. You can look into it. If you go to creditsuite.com/virtual, you'll now find who we recommend for virtual addresses, but they're kind of expensive. Or here's what you need to know. Michael, you need to make sure Opus is not a P.O. box and a UPS address. A lot of these guys are. iPostal's another one that looks cheap. And so a lot of people go with them, but they're really UPS addresses. And that'll oftentimes get you denied. If you get your DUNS number with an Opus address and you realize you get denied, it's probably because it's not a virtual, it's a UPS. I don't know enough about it to speak to it. But that being said, I would at least look into that. We now don't recommend Regis because Regis has all kinds of issues that we've run into. But you can go to creditsuite.com/virtual to see who we recommend. That might help you there as well. Is iPostal okay? No, iPostal is a UPS address. iPostal is bad. You don't ever want to use a UPS address or a P.O. box address when you build business credit. You will get denied. Here's your choices. Use a physical address, best case scenario. Virtual address, second best case scenario. Use a home address at last resort. Some sources like Walmart will not approve you if you use a home address. Sources like Staples will. So some sources you will not get approved for with the home address. Others you will. You use a UPS address or a P.O. box, you're not going to get approved for much of anything you need when it comes to loans, credit lines, or revolving credit. Never do that. Never use an iPostal. If you're looking for a virtual address, don't go with the cheapest option. The cheapest option usually is not a real virtual address. It's a UPS address. There's a huge difference between the two. UPS address and P.O. boxes are all put into a database that lenders and credit issuers check. If they find your address and their computers reference this, if their computers reference that you're using a UPS or a P.O. box address, you automatically get denied when it comes to applying for business credit. So you have to make sure you do that right. Michael, thank you. Appreciate it. And I appreciate that feedback. Thank you so much. And I have to get rid of them. iPostal, you do. It's not worth the money. You're paying for UPS address, which you don't need. What's wrong with me going forward? Okay. So that being said, I'm going to go ahead and wrap this up. A lot of you are coming in late. Okay. If you go back, the stream's available on Facebook. You can watch the whole thing. For those of you that want information on business credit, go back to our 11:30 stream on Facebook last week. We map out all the steps in the entirety that will get you the answers to build business credit. And don't forget that you can also grab our free guide at creditsuite.com/Facebook. And if you also want to talk to us more, get a free Credit Safe credit report and talk more about building business credit, you can either schedule a consultation or give us a call immediately and get us on the phone and we'll talk to you more. Jesse says, love this info. Wow, finally found someone who knows the answers. I appreciate that. Thank you very much. I don't have all the answers, but I'll be the one that tells you when I don't, and I'll go find them for you. So that being said, hopefully you got value from this. Okay, I'm going to go ahead and wrap this up. A lot of you are coming in late. Facebook.com/Credit Suite. You can get the stream in its entirety. Those of you that asked about business credit building, go to creditsuite.com/Facebook to get your free guide and go back to Facebook.com/Credit Suite. Whew, a lot of URLs to get our previous video last week where we map out the steps to build business credit. I will be back next week talking about 10 different ways you can get credit lines for your business even when you think you can't qualify, even when you can't get money at a bank. We're going to be switching from whiteboard to chalkboard here, and we're going to be talking next week about ways to get credit lines even if you have credit issues, even if you can't get financing in a bank. I will be back here Thursday at 11 o'clock Eastern to dive into that topic next week. Thank you very much for the likes. Thank you for the loves. Thank you for the shares. I see that you're doing it, and it means a lot to me of all of you that took the time to do that. I appreciate it. Kevin, it's amazing. Like always, we want to conference sometime in the near future. We will get together. And again, drive safe. I know yesterday you were up in Iowa in the snow, and I know you're an expert, so it's no big deal to you. But driving big rig trucks in the snow seems a little scary to me. So make sure you drive safe up there, buddy. I hope you're doing well. Thank you all very much for tuning in. I'll see you next Thursday at 11, where we talk about 10 different ways you can get credit lines for your business, even when you can't get a bank loan, even if you have credit issues, even if you don't have collateral. We're still going to talk about answers. Look forward to seeing you then. Everybody, have a great week. See you next Thursday at 11 o'clock Eastern. Bye, everybody. Have a good day.